So I wanted to get everybody's feedback on this here. Somebody asked me the other day about the video I posted about how the loans work on these cars. So this would be a simple $50,000 loan that you would be taking out here on this vehicle. So on a $50,000 loan, your finance manager should present you with a 60-month term, is what I would think they should do. When you bring this in, it automatically creates up to 5%. We're going to change this to 12.99% just for the sake of the video. And you can see here title, registration, and other fees. Other fees, what are they? That's the nonsense fees. This site here, calculator.net, came in at $3,500. That's all these illegal fees that people are adding in there: a delivery fee, this fee, that fee. The only fee you should be adding in there, if you were going to put it up to that kind of thing, would be like a warranty. You know, if you're paying $3,500 for the warranty, all your title, registration, doc fees, we have a $499 doc fee. There's a lot of work that goes into getting all this paperwork processed and stuff. So the $499 doc fee, I believe, is a fair number. Um, some people would say it's not. I say it is. I think it's a really nice way to start off. So here on a $50,000 loan at 60 months at 12.99% interest with zero money down, you're at 1231.01 is your monthly payment. So you have 60 payments of that. So your total of your auto loan is $73,860. If you come down here to your monthly authorization fee or amortization, sorry, your interest is 585 on your first payment. Your principal is 645. Almost as much in interest as it is in principal on your first payment. Now you can see how when you get into the end of the year too, you're double the amount of money on here. So I always tell people, when you get a nice bonus from work or you get a your income tax return, you should deposit that income tax return right into your vehicle. Everybody wants to go on a vacation, they want to go here, they want to go there. That's not what I believe. I believe that you should put your 12.99%, and unfortunately, some people are at 22.99% on a car like this, which is even crazier. 15.25. They're paying $91,000 for this car. If you're at 22.99%, you should not be buying a $50,000 car, in my opinion. That doesn't mean that I can spend your money for you or tell you what it is, but just to get a little bit of clarification on that, $11,782 is your schedule in the years. Now, if you go to monthly, you're double the amount of money, more than double on your first payment in interest over principal. So if you're not paying more on there, like some people will take a loan like this out and say, I'm gonna pay it off. So if you're paying $3,000 or $4,000 on each month, this thing's gonna pay off quickly here. It's not gonna be that big of a deal when you get down to the 22.99%. Um, on top of that, let's go back to a normal rate here of 12.99%, which I would say is probably close to the average used car loan. Some people are as high as 2024. I've even seen 28%. People have bad situations that got them where they got them. You know, I had a 450 credit score when I met my wife, so I understand. I don't judge. I don't do any of that. Things are easily fixed. You just got to make good, proper decisions. So, in my opinion, if you're looking at a $50,000 loan on a vehicle and you want to put zero money down, I would tell you that the only way you should do it is if you could go to a 48-month loan. I think anything more than a 48-month loan is just getting you into a car that you really can't afford. If you're buying a low mileage car with 5,000 miles, 10,000 miles, or you don't put a lot of miles on your car, if you went to 60 months, no big deal. But going to 72 months, 84 months, I understand it gets you into the car that you want. To me, it's not great. But here on a 48-month term, you're only paying $69,000 over the course of 4 years at 12.99%. Um, your first payment here is 585. Your principal is 865. That's a hell of a lot of money going towards the principal there. Still not enough. If you can't afford to pay this loan at $2,000 a month, you know, over here, then I don't think you should be getting into this loan. Um, what the dealer's going to try to do for you, though, they're going to try to help you out, and they're going to get you into 72 months to make this a little bit more affordable. Great that they do that for you. They get the car down to $1,000 a month, you know, a little over $1,000 a month. That's great. Now, this is no warranty in here, no anything, no money down. $1,000 a month is what your payment is, and you're going to be paying a total of $78,000 if you make the bare minimum payment every month. Now, what does that mean? That means in 4 years, when you're putting 20,000 miles a year on your car and you just added $80,000 into your payment, you're still 3 more years left on your car. So after 4 years, when everybody, oh, I got to get out of my car, get out of my car, can't stand it, you still owe $22,845 on that car. Now, if you're only driving a couple thousand miles a year, 5,000 miles a year, your car's probably going to be worth in the $31,000 range at that point. Maybe $30,000. But if you're one just like everybody else in America and you're driving a lot of miles, your car is probably worth closer to $14,000 at the end of year 4, and you're $8,000 upside down. So I always say, 72 months, if that's where you got to be to get to a payment you need to be, I would bring this back down to 48. And I would say, let's look at a $35,000 car. Now, in 48 months, on a $35,000 car, it's going to cost you $49,000. But at the end of year 4, when most people really need to start making a change, look at your balance right there, $0. $0. So $35,000, if $1,000 payment is where you want to be at, is really the go-to for me. So, another thing that I would always suggest that people do, right now you have no car payment. You want to get into a new car, you're not, you don't want to be where you're at, and you're ready for a new car because you've been going for a long time. Why don't you wait 6 months? Your payment's going to be $1,000 a month. So why don't you wait the 6 months and put down $6,000 in 6 months? Get used to paying that $1,000 a month. Let's make it like the $6,300 or whatever it's going to be, and let's calculate that out. Now your payment comes down to $853 for 48 months, which is below what you're already used to paying. You're comfortable with it. You know that $1,000 a month isn't a big deal for you. It's actually hit home. You've experienced life with that. You've gone to the grocery store. You've had the tough months over the 6 months where it was like, oh, I got to write this check for $1,000 for the car. Mind you have insurance and upkeep on your vehicle as well in there. So that $1,000 turns into $1,300, $1,200 quickly when you start doing other things in here. So now you're putting $6,300 down. Now you got $853. You're in a much better financial situation. Now, you have 63. You really can put down 10,000, but you don't want to put the 10,000. So what do you want to do? To me, don't put the money in the bank. The dealership's going to tell you, keep the money in the bank, save it for a rainy day. I'm going to tell you, no. Put the $10,000 down, because right now your total 48 payments at the 6,300 was 40,000. Now you put it up into here, you're down to $36,000. So your payment drops to $754, much affordable. On top of that, because you're putting $10,000 down, you're probably going to get closer to an 8.99% as opposed to the 12.99, because the bank really likes you. They might even go down to a 6.99% because this loan is a low risk loan for them. If you're willing to put $10,000 down, they're only financing $28,000 on a car that's worth over $35,000. It's going to work out just fine. So with your 6.99%, you're going to be down to $673, and it's only going to cost you another $32,000 to pay this thing off. You get into a situation after 2 years, you got that little sports coupe that you paid $35,000 for because you really wanted a little Mercedes sports car to drive around in. Great car, really nice. Boom, you got your wife pregnant. Now you have a kid on the way. You can't put a car seat in the back of your sports car. Now you only owe $15,000 after year 2. So would you rather only owe $15,000 after year 2? Or would you rather be in a 72? Let's change it to 84 months. Great, you're only $424 a month, but now you got to sell this car after year 2. You owe $21,000 on that car. Your car might not be worth the $21,000, or that might be all you are. So you have no equity to put down into the next car. So it kind of puts handcuffs on you, and it keeps you in a credit situation that's not good. This is a simple calculator.net auto loan thing. I found this just by going to Google, and I'll show you how I did this here. I don't know if it's going to catch it all in here, but I just went right here to Google, and then I typed in there auto loan calculator, auto loan payment calculator, And I selected the first one that came up. It was calculator.net. I'm not sure if all this is going to fit inside the little square that I have up here on there, but just for the sake of argument, you can see where it's at. But I hope this video helps. I hope it makes a little bit of sense. And if you have any questions, comment below and let me help you answer them. Take care.